Ethereum just triggered a major warning signal. It's called the death cross. This bearish signal triggers when a shorter-term moving average crosses below a longer-term moving average, indicating that selling pressure is increasing. Many traders see it as a sign of a deeper correction or the start of a bear market, and you can see why when we look at the 90% collapse in 2018 and the 72% decline in 2022, both of which happened after a death cross. So, does this mean that Ethereum is about to crash and enter another bear market, just like it did in the past? Well, Ethereum's first ever death cross actually happened in November 2016. What followed was a 36% straight decline, with no bounces or relief rallies. But that marked the bottom before a 20,300% rally in the next year. Of course, one can argue that Ethereum was still in its early days, making it far more volatile. If we fast forward to the next death cross in April 2018, we see something completely different. Ethereum first rallied 120% before eventually turning around and collapsing by over 90% as Ethereum saw its first bear market. And the same thing happened at the beginning of the next bear market in January 2022. After the death cross, Ethereum saw a dead cat bounce of 47% before giving back all the gains and falling by 72%. So two different bear markets, but the same end result. In fact, even in September 2019, Ethereum's death cross played out in two stages. A 32% rally first, then a 45% crash that erased all the gains and more. So if we're following history, does this mean we're about to see another short-term rally before a major crash? Not necessarily. Because while these examples suggest a clear bearish pattern, Ethereum's death cross has not always led to disaster. One of those times was April 2020 during the pandemic flash crash. Instead of a short-lived rally, then a massive decline, Ethereum fell by just 5%, then launched into a 2,900% rally over the next 2 years. Anyone betting on Ethereum to go down back then lost a lot of money in doing so. Now you might be thinking that today is quite different to April 2020 because back then the government printed trillions of dollars to stimulate the economy after COVID. And that massive influx of liquidity is what caused risk-on assets like Ethereum to melt up. Well, that's true. But then there's the death cross from September 2023 that happened during this bull run. Following this signal, Ethereum entered a choppy consolidation period for almost 2 months. During this time, price did not fall more than 7%, quite similar to the limited drawdown after the signal in April of 2020. Eventually, selling pressure was completely absorbed, and then Ethereum rallied by 170% in just 150 days. And it's not just September 2023. We also saw this in August of 2024. Back then, Ethereum saw a sharp drop as the market was panicking over a potential recession. This caused the 50-day moving average to drop below the 200-day moving average. But instead of a sharp rally, then a crash, Ethereum stayed in a tight consolidation for 3 months and fell less than 15% from the signal. This consolidation then led to an 85% move up as recession fears cooled down. So we have a total of 7 death crosses that Ethereum has seen throughout its history. That's November 2016, April 2018, September 2019, April 2020, January 2022, September 2023, and August 2024. In 3 out of 6, so April 2018, September 2019, and January 2022, Ethereum saw an explosive short-term rally between 30% to 120%, then collapsed by 45% to 90%. But in April 2020, September 2023, and August 2024, Ethereum saw a downside of less than 15% from the signal and some consolidation before going on a huge run-up. November 2016 was the only example where price continued falling for another 36%, but again, that was at the very early stages for Ethereum. So, which one are we in today? Right now, Ethereum's death cross is sending mixed signals. That's why being able to react quickly is more important than ever. In our new trading service for digital assets, we share all of our crypto trades. We are 4 veteran traders, providing each and every one of our moves. Sherlock, for example, returned 392% total gains in January alone with a 90% success rate. And Pika secured a 100% win rate across 13 trades, delivering a total return of 212% during the same period. The sponsors of this service are our crypto partners, Bitunix and Bybit. which are, in our opinion, the best platforms to trade crypto on whether you are someone just starting out or one of the big boys. To access our service, you just have to choose one of our partners and start trading on their platform. You'll immediately get access to all of our trades. Now, to figure out which death cross scenario is likely to play out today, we have to take a step back from pure technical signals and look at what is happening within the Ethereum network. This chart shows us the number of transactions occurring on Ethereum. When the line is rising, it tells us that network activity is increasing, meaning more demand for Ethereum. And if the line is falling, it signals a decline in network usage, meaning lower demand. If we add red dots to the episodes where Ethereum saw a death cross, a clear pattern begins to show up. In the 3 death crosses that led to short-term rallies followed by massive downside, so April 2018, September 2019, and January 2022, network activity was already declining heading into the death cross, and even after the cross, it kept falling, confirming the weak demand. But in the 3 death crosses where Ethereum consolidated and moved higher, so April 2020, September 2023, and August 2024, network activity rose after the signal. In fact, even the massive rally after the first death cross in November 2016 was accompanied by a parabolic rise in the transaction count. Today, network activity has remained flat throughout Ethereum's recent decline, so not really confirming the bearish move. And that's why we believe Ethereum is more likely to follow the death crosses that led to a consolidation and move higher. But as traders, we have to stay open to all scenarios. So if this transaction activity starts rolling over and drops significantly in the coming weeks, that would be a negative signal and make us flip bearish on Ethereum. For now, that's not the case. One thing is clear though. Despite the media suggesting that Ethereum's death cross marks the end of this bull run, the data tells a very different story. Even in the 2 cases that did lead to major bear markets, Ethereum saw a huge rally first before the real drop. So until we see clear signs of a bear market through Ethereum's network activity, we remain cautiously optimistic.